All right. Good morning, everybody. Go ahead and give it a moment for everybody to get in and get caught up. I posted a little bit of chat in the large caps chat room last night, trying to give a little bit of perspective to people. I seen a couple people yesterday kind of maybe taking the wrong track with this sell-off. Um, it doesn't seem to be connected to COVID. This isn't like fear in the market with people dumping things. It's the institutions doing a controlled rotation, right? So just something to keep in mind. Maybe, scroll up and read what we were talking about. Go ahead and get started. These morning briefings are designed to teach you how to do a morning briefing. So, um, if you have questions, come into the chat after the stream is done and ask for Sig, and I will happily, gladly try to answer your questions. Uh, the goal is to get you to the point where you are able to do these morning briefings on your own, that you could, put together a morning plan that gets you on the right track so that you kind of have an idea of what you should be watching near the open and maybe what direction you're going to be trading today in the different markets, right? That's the goal of these morning briefings. As a side benefit, you get a little bit of a heads up on the day from my perspective, but that isn't really the goal. I'm not trying to give you a fish. That same old analogy, right? I'm not trying to give you a fish. I'm trying to teach you how to fish. So a part of the daily routine, we've added FX Street. It's just a shortcut when we're looking at the economic events on the day. You don't need to be signed in. You can see I'm not logged in. It gives you a little bit of perspective on the dollar, shows you what we have on the economic agenda, and then gives you a color code of its anticipated impact within the marketplace. So we got a couple of them on the agenda today. I also posted a picture in the chat from the Discord bot where I ran the calendar command and brought up the economic events on the schedule through that. Bloomberg 5 things you need to know. One of them is what I talked about last night. There is talk on the street of a possible 50-point basis hike in March, and that there could be more than one. So it went from, no, maybe we may raise rates, to, from that it went to, well, yeah, we're probably going to need 4 or 5 25-point rate hikes. Then now it's, well, let's get it completely ahead of the curve, go big or go home, start with 50, maybe do more than one of those 50s and still get 3 or 4 hikes on the year. Wall Street's scrambling to reshape their portfolios for that kind of a situation. One, there's the old 60-40 concept, right? That your balanced portfolio is like 60% bonds, 40% equities. Well, with rates so low, a lot of those firms have been, swapping out and going more heavy equity and a lot less on the bonds. We're seeing a capital rotation. And then there's, of course, the energy situation, earnings kicking off. There's a lot of things that are going on, right? So it's not fear in the market or some kind of corona crash or anything like that. This is a controlled rotation of capital. It's going to catch a lot of you off guard when we can no longer just blindly buy the dips and trade tech that I've seen a lot of people doing in the last 2 years, calling themselves traders when all you had to do is hang on and go long every time we dipped. That works until it doesn't. So inflation, pay raises. They're giving another bump. The talk about oil. We're going to be looking. What is that? Ah. Commercials. So markets mixed. They talked a little bit what was happening over in Asia. There was a discussion about the language that Japan used yesterday when I had mentioned that they were going to not hike, but that they had their forward forecast was a little off. The language was different, and there was a good article about it on Bloomberg. If you want to kind of dig deeper into that. And then there was talk on Bloomberg about how last year at this quarter, first quarter, we went from a negative market into a more positive market because of the earnings. Like that was the shift event to change our direction. So there's a little bit of that talk about, really keep an eye on earnings through the rest of the week and looking at how it may impact us for the rest of the quarter going forward. So we bring it over to Thinkorswim, go to the Market Watch calendar. If yours is cluttered like this, you can hit the show all and turn everything off and just turn on the Econo Day event. I usually grab the description, put it next to the time. It makes things easier to see what we've got to work with. 8:30, 9 o'clock. Those are going to be the two big takeaway time frames. I thought that there was a 30-year bond auction today that's not showing up in here. You may see it if you run the Discord bot. Now, the Discord bot is showing a 20-year bond auction. It's like I've said before, though, look in multiple places when it comes to, economic events for the day, because you don't want to trust one source to have everything on the list. So be careful at 1 o'clock, even though it's not on there, right? Just make a note of it. Don't get caught sideways at 1 o'clock. The S&P did hit that weekly expected move yesterday. So we made the entire week's expected move. And nice big pin bar this morning, working our way back up through the other side of it, right? So far this morning, we're back on the other side. As you can see, the volatility is getting just more and more extreme. It would not surprise me at all if we hit both edges of the expected move again. It's been that kind of market lately. So the general consensus in a market like this is that you reduce your position size, use a wider stop, and aim for a higher target profit. When you do the math, you have the same kind of risk, the same kind of returns. You're just spreading everything out a little bit so that your trade isn't getting stopped out immediately, and it actually gives you a chance to get a trade. So we're on the 30-minute. We have a head and shoulders forming. This is an inverted head and shoulders. So there's the left shoulder in the head. We're looking for the right shoulder. To get that shoulder, we're going to need to go down, right? We need to get some dip there to actually perform the other side of the shoulder. So keep that in mind. A gentle sell-off as we near the open, whether it's from those early economic events or because of the dollar opening at 8 or the bonds opening at 820. We'd be looking for some sort of fade before the open to get us down near that last pivot point, 45.60 area. That would complete the right shoulder, and then we would be looking for reciprocation back the other direction. When it comes to a head and shoulders pattern, the neck is supposed to be the buy spot, right? So it's what they call a break of the neckline. I'm not much for entering into new trades at a breakout spot. I would much rather get in on the pullback. Now, the pullback doesn't always feel too good, especially when it's some kind of V bottom and you never really had a chance to recognize that that was the bottom until it's already ran away and it doesn't come back and build some sort of basing pattern. Still, I would much rather catch the reversal somewhere, let it start making its move to the upside, and then get in rather than getting the neckline break. Uh, if you're like me and you don't want to trade the breakout, but you miss that chance on the low, look for a Busby opportunity. We should see one, right? If it was a momentum play, we wouldn't be expecting any kind of pullback for a Busby, but this isn't a momentum play. So catch it on the pullback, catch it on the breakout, or look for a Busby after the breakout. We still got targets in mind. It'd be 50% of the head and shoulders and then 100% of the head and shoulders, which coincidentally, not much of a coincidence because that's the way these are designed to work. It brings you right into those pivot points. If the market does not like the news that is coming out this morning, we're going to re-challenge this pivot point and then work on challenging the low of the Globex. It would take economic news to do that. And one of the name of this stream this morning has dead cat bounce in it. Now, that was a phrase that used to really drive me crazy. Like, what the heck is that? It's a general discussion on the part of the pullback in a trending market, right? When you have a market in a trend and it pulls back before making that next leg lower in the pullback, we don't know yet. Is it really just a pullback before it rolls over and goes lower? Or is it a pullback that's going to continue to move to the upside? Is it a change in market sentiment? If it's just a pullback before rolling over, that's the dead cat bounce, right? It pulled back, rolls over, makes that move to the downside. So instead of buying the dip, we're selling the rip, right? That's the rip. We'd be selling into it for the next rollover and the continuing move lower. I'm not saying that that's what we're going to do. We don't know yet that that's what this is. Is it a dead cat bounce or not? Of course, we won't know 100% sure until we look back afterwards. But there's some clues along the way to kind of give us that heads up on, is this just a pullback or not? This area back here no longer has liquidity, but it is an old volume zone. So when we're drawing out our support and resistance lines, you want to have a clear understanding of what it is that you're marking out. It's not just some random price point from back here where we say, oh, yeah, that was the low of Monday, which is true. And that's an institutional pivot point, the low of the day, open, high, low, close. So it is an institutional pivot point, but there is no expectation of, like trapped traders or any liquidity left because we've gone through that area. We've cleaned it all out. The only thing that is there now is old volume, something like a volume profile or a volume node. We're already through it again on the other side, right? So we've crossed through there multiple times. There is no liquidity there. Should things start to get significantly nasty, we're going to look to kind of revisit these lows around the COG line, 45, 45.20, 45.11. That'd be our next target. And 4,500 is the significant level, right? We need to maintain above that this week. We are at the low of the range. There's a lot of expectation that we're going to just run the same old song and dance and come back up to the top of the range. If you think about that and you were to try to trade this in something else, say the SPY for an example, what is the cost of a 470 call right now? Probably not very much. It's a long ways out of the money. Or, even go big style, what's the cost of a 478 call right now? Probably not very much. It's really far out of the money. Yeah. Is there an expectation that we're going to go that far? Yeah, we could, right? We could. So it's not the fact that, hey, this is a high win rate play. It's not a high win rate play. but it has a phenomenal risk to reward. And if you can tell me I can risk $12, $15, $20 to make 150 to 200 to $300, I'm game. I want to take a trade like that, right? It doesn't matter if it may only have a 35% chance of winning. Because if you continue to do trades like that, those high payout, low risk trades, you get a nice hit every once in a while. You are going to lose more often doing a trade like that, right? We're already mentioning that it has, a 35% chance or so. Now that's a ballpark number without even looking at the options. But if we were to come in and look at the options, we could first just start with the expected move. We're at 457. A $14 move would put us at 470-ish. We were just talking about 470, so the January 28s seem to fit. We could even go to the 31s. We're on the call side. Just add a few more strikes to the situation. The 470, pretty far out of the money. You're looking at around $140 of risk. To buy one of these, it costs you around $140. What's the expected return on a trade like that? Well, if we were to move $12 in that direction, we could just start counting. 1, 2, 3, 4, 5, 6, 7, 8, 9. We'll just stop at $10. What you bought for $1.40, you'd be unloading for around $8.70. We'll just say $8.40 for some easy math. You bought it at $1.40, you sold it at $8.40, you made a $700 profit, and you risked $1.40. Got a nice risk to reward to it. You wouldn't have to hold it all the way to the target either, right? And you could choose to go a little farther out than the 470 to get them cheaper. Because if you look at that 474, you could buy 5 of those and still be, within a decent amount of risk, and then fade that play on the rally up. I'm not saying we're going to make this move, right? But I am saying when you look at the risk to reward, you keep the risk low and aim high on a target like this because it's the same target. It's the same song and dance. If it doesn't work, meaning we flip over and start to break, just sell the option back. Just get out of it. Maybe you take a little bit of a ding, right? You lose 35 or 40% of the cost of that option. Still not a bad trade. With no risk, you don't get any reward. Bringing it into the NASDAQ. Just start on the daily like we normally would. You can see that we breached the weekly expected move. We are outside of the range of that box. We broke the pin from the other day. Now it's trying to get back into the box, but it's not even there yet, right? Are we there yet? Are we there yet? How about now? Are we there yet? Not yet. So we're getting kind of tangled up in this previous price action. Use the institutional pivots for first touch plays like the open of yesterday, yesterday's intraday high, the Globex. Those are very likely going to have first touch plays, and that's if we can get back above the weekly expected move and maintain this impulse play to the upside. Notice these candles are huge. This isn't a trend to the upside yet. It's just an impulse play. Price is impulsing, right? It's acting impulsively. It's not a trend yet. Should the market not like the news this morning and everything wants to flip back over, we'll revisit the lows. We'll look for a break below this failed flag. Now, it's a great setup on the failed flag. Too bad it happened while we were all asleep. Well, okay, I know some of you were awake because you are a part of the overseas crowd that we have at the Bullish Bears, but I was asleep. I missed it. That's the failed flag setup. You see the nice basing pattern defined by the Fibonacci. We enter along these lows, just like I was talking about with my class yesterday. When we're dealing with a structure, I would much rather get in along the lows than wait for it to break out and try to catch it out here somewhere. Of course, you don't get that chance all the time to get in at these lows if it V bottoms on you or if it double bottoms, but it happened while you were sleeping. If we're really lucky, we will also see the NASDAQ give us a Busby like we were talking about in the ES. And that would give us a chance to get in on the lows. But at least on the ES, we had the head and shoulders. Here we have the failed flag. Maybe it's a morning that I might decide to trade the ES instead of the NASDAQ. Yeah, could be. With the talk about the bonds, I put this little grid together. I'm going to share this in the chat later this morning, probably when I'm done with this stream. These are the different bonds, and then I've got the ES and the NASDAQ on there so you can kind of get a little bit of perspective. I'm on a 1 hour chart on all of these, and you can kind of get the grasp of all of this. Bonds are down, the S&P futures are down, the NASDAQ is down, right? Everything's down. So that argument about, their capital rotation and getting into bonds, I get it. I get the argument, but we're looking here, and it's like, where you at, Joe? Right? Keep your eye on correlation in the market. We're going to be looking for these markets to move in sync. Now, I know you may think that they already do that, but they don't. A lot of times we're in an uncorrelated or a bifurcated market. If we start to correlate, that's when things can get really crazy because we can see fast moves that way, negative and positive, right? The moves that we've seen to the downside that were so violent, it wasn't the distance that we traveled that really freaked people out. It was the scope and speed of the travel that really freaked people out, right? That was the one that really kind of shook people. That happens when we correlate, when we've got all the markets moving in the same direction within the basket. So watch these index futures looking for the same kind of correlated market. We're going to continue to be looking at the VIX for that confirmation. When you have, the NASDAQ or the S&P breaking high through resistance, you should be seeing the VIX break lower through support. If you don't see it, it doesn't mean you can't trade it. It just very likely means that the breakout you're seeing is a fake out breakout, or that at least the street doesn't see it as a sustainable breakout, because they would be dumping any of their VIX to ride that, right? They're not going to hedge it with the VIX that way. They do hedge their plays, but it's by, they'll have 1,000 ES contracts long and 250 to 300 contracts short at the same time. And if they're worried that it's going to go down, they'll just add to the short side. That's their bigger play. In a really immediate environment, when they see the market dumping out of the side of a cliff, they jump into the VIX because it has the liquidity and they can rotate in and out of it really fast. Right? When they get into the ES futures or the NASDAQ futures, they're not rotating in and out of it very fast. You can see that in the COT report. So we are in a risk on marketplace. That's another way of saying it's bullish across the board, right? It's risk on. So we got green in the sectors. You can see that the commodities are up a little bit too, and your precious metals, um, finance and energy. Be careful with the finance. They're kind of leading the way with the earnings, but energy is a real big deal, especially with that Abu Dhabi crisis. A couple of these bigger tech ETFs like cloud computing, IGV, the QQQ, IWMs, that's a part of the whole dead cat bounce discussion. We don't quite have a solid answer yet on, if we should be buying the dip or selling the rip. Anything that's not up at least 0.5%, then I really don't consider it to be up very much at all. And you can see that the Qs don't even hit that benchmark. The pot stocks are looking really good this morning. You definitely want to try to peek at the individual sectors that don't show up in the S&P sectors, right? Those old legacy S&P sectors. So things like the EV market is looking really good this morning. Got a lot of fire going on in there. The pot stocks is another one that's looking really good. And then crypto names. So we don't have those in the S&P 500, right? We don't have sectors like crypto sector in the S&P sectors. If you want a list of the S&P sectors, Thinkorswim provides two different ones. So you go in and go to public. You want S&P names. So just kind of back away, go through the alphabetical order until you find a S&P sector indexes and then sectors and industries. The sectors and industries is going to be a very long list. The smaller list is the sector indexes. It's a small list. Now, unfortunately, it doesn't make a lot of sense in their naming, right? So if you're looking at that and you're like, what the heck is S&P 500 number 10? Don't even stress on it. Just go into customize, get rid of the symbol, and put in the description. Now it makes more sense. Energy, materials, industrials, consumer discretionary, consumer staples. And that's not a private personal watch list. That's straight off of Thinkorswim, right? Simple, easy. So emerging markets is kind of my go-to for global risk. You can see the EEM, really nice bid up market this morning. We're in that expanding pattern down here, that megaphone pattern. It's going to break out of this thing soon. It's not telling us which direction it's going to go, but it can't sustain inside this range. When it comes to energy, really be careful about the energy that you're looking at. I've seen a lot of talk about green energy this morning. And then, of course, with the whole thing going on the supply side, drilling, production, exploration, energy is a broad subject. It's not just one thing, energy. And yet that has been the sector with the plays, right? That would be the focus. So what I got for you guys, be careful, be safe, have a good one, and I will see you all later.